Welcome to the Deep Dive. Today we're digging into a pretty dense stack of source material. We've got articles, technical notes, foundation announcements.
A lot to get through.
All of it is centering on Algorand's pretty ambitious 2025 roadmap and, where they actually stand as this year wraps up.
And it's a really essential moment to check in. When Algorand first launched, their entire premise, their whole reason for being, was solving what people call the blockchain trilemma.
Right. Getting speed, security, and true decentralization all at the same time.
Exactly. And for years, they had to prove the tech actually worked.
And they did. I mean, for years, they've touted these impressive specs, instant finality, sub-3-second block times, scaling up beyond 10,000 transactions per second.
Right.
But our sources all confirm this fundamental and really crucial shift in late 2025. They basically decided that the proving phase is over.
It's done. Now the focus is squarely on usability, enterprise integration, and, future-proofing.
So they're pivoting. They're moving from just being a fast, reliable blockchain to being a platform that's actually ready for, institutional and autonomous adoption.
Precisely. The network's core performance is now just an assumption. The mission has shifted entirely to growth and real utility.
Okay, let's unpack this transformation for you.
Yeah.
We've distilled this massive roadmap into 4 pillars.
4 main themes.
First, advancing core Web3 values, like decentralization. Second, achieving mainstream adoption by just killing the complexity. Third, building out some really specific high-impact use cases.
And the last one is the really fun one.
Pushing the bleeding edge of tech, especially with AI and quantum security. But to understand any of it, we have to start with the engine.
We have to. It's all about pure proof of stake.
PPoS.
Yeah, the PPoS consensus mechanism. It was conceived by Turing Award winner Silvio Macaulay, and it really underpins this entire strategy. That word pure, that's the key.
That's what differentiates it from, say, proof of work or other proof of stake protocols.
Exactly, even common bonded proof of stake.
So for you, listening, if you're holding ALGO or maybe thinking of participating, what does that pure distinction fundamentally mean?
It means you maintain full liquidity and control.
So no locking up your tokens?
None. Unlike systems where you have to lock up or bond your tokens for months, Algorand doesn't require it. Your ALGO, it just stays in your wallet, completely liquid, while still helping secure the network.
That gets rid of a huge financial barrier to entry.
A massive one. And crucially, there's no token delegation. This prevents that centralization of power into just a few, big staking pools or exchanges. Every token holder is equally eligible.
And that lack of delegation, the non-fixed validator set, that seems to be the linchpin for their security claims.
Yeah.
How does the network secretly select who verifies the next block if everyone is potentially a validator?
That is the beauty of it. It's called cryptographic sortition, and it's powered by the verifiable random function, the VRF.
Okay, so think of the VRF as what? A lottery.
An incredibly fast, mathematically sound cryptographic lottery. In every single block round, the VRF takes a private key and a public seed value from the last block, and it spits out 2 things.
What are they?
A pseudorandom number and a verifiable proof that the selection was legitimate.
So it's mathematically fair, weighted by how much stake you have, but it's all done in secret until the very last second.
Exactly. This random secret selection means block proposers and committee members are chosen privately, instantaneously. This is their speak once model.
So an adversary, someone planning a DDoS attack, they can't know who to target.
They can't possibly know who to target before that node does its job. The target is only revealed after they've broadcast the new block.
Which makes those kinds of targeted attacks basically non-viable.
It's a very powerful architectural defense.
I also noticed the sources really distinguish between key management, like spending keys, versus participation keys. That sounds like another critical layer of security.
Oh, it's essential. They enforce a strict separation. Your offline spending keys control your assets. Your participation keys are ephemeral, temporary, used only for consensus.
And they get deleted after a certain time.
A node generates them for a limited time, and then, poof, they're deleted.
Why does that matter so much?
It ensures what cryptographers call forward secrecy. So, if a participation node were compromised today, hypothetically.
The attacker would only get those temporary keys.
Exactly. And because those keys are deleted and totally separate from your spending keys, the attacker can't steal your funds. And they can't go back and mess with past blocks. This compartmentalization is key for institutional trust.
Okay, that is a highly robust foundation. So if the mechanism is that secure, let's talk about how the community is now using that to gain control through governance. That's our first pillar, right? Decentralization progress in 2025.
And we saw a massive, undeniable shift in network control this year.
How so?
Following the rollout of new incentive rewards, the Algorand Foundation's share of the total online stake has just plummeted. It dropped from roughly a 63% majority down to just 21%.
Wow. From almost 2/3 control to barely 1/5, that is a seismic shift away from the founding entity.
It's tangible, verifiable decentralization. And it's not just about the stake. The sources show the number of active participation nodes jumped by 121%. We're approaching 2,000 active validators now.
So governance power is genuinely spreading out?
Yeah.
What about physical decentralization? I know a lot of chains rely on centralized relays, which could be single points of failure.
They addressed that head on. In December 2025, they launched peer-to-peer networking, P2P, on the mainnet.
Okay.
This feature lets nodes connect directly to permissionless repeaters, across a global mesh network. It hugely reduces the reliance on those old centralized relays.
Making the network much more resilient.
Much more. Resilient against censorship or just regional failure.
And the governance structure itself, it's evolved beyond those slow, quarterly, often off-chain votes we used to see.
Oh yeah. The new XGov, or Expert Governor, platform launched on mainnet in October, and crucially, this immediately put the entire grant distribution process,
The money for development.
all of it, fully on-chain and under community management. 6 grant proposals have already been approved and funded by XGov since it launched.
That's great for managing funds, but integrating general governance, protocol changes, economic shifts, that seems massive. What are the challenges they face moving all governance to XGov in 2026?
That's the right question. Moving from a controlled, foundation-led system to a truly decentralized one introduces, coordination risk.
Things get messy.
Things can get messy. When decision-making is spread across thousands of governors, speed can suffer. Aligning on complex technical changes like the big economic redesign that's coming, it just becomes inherently slower and more contentious.
So the success of XGov next year really hinges on the community's ability to coordinate under pressure.
It's their big test.
That sets us up perfectly for our second pillar, killing complexity for mainstream adoption. If they're targeting enterprises and regular users, Web3 has to feel like Web2.
It has to.
So what specific tools launched or were previewed to reduce that friction for the average person?
For the everyday user, the ultimate barrier has always been the seed phrase.
Ugh, the seed phrase.
Algorand is tackling this head-on with the Rocka wallet, which is previewing right now in late Q4. Rocka is designed for non-technical users. It completely eliminates the seed phrase.
That's huge. How can they do that without sacrificing security?
They use something called LiquidAuth. It's a passkey-based standard built on FIDO2 and WebAuthn.
That's the same tech that Google and Apple use for passwordless logins.
The very same. Your private keys are secured by the standard passkeys on your device. So your phone or your computer provides the authentication, not some 24-word phrase you have to hide under your mattress.
I think anyone who's ever lost a recovery phrase can appreciate how critical that is for mass adoption.
And that feature, LiquidAuth, is already integrated into the popular Para wallet.
Okay, so that's for the user. What about for big enterprises? They're dealing with legal risk, compliance, integrating with legacy systems.
That's the sweet spot for Intermezzo. It launched in Q3. It's an enterprise-grade custodial API built on industrial-strength platforms like HashiCorp Vault.
And its purpose is just to abstract away the blockchain complexity.
Exactly. It handles all the key management, the digital asset custody. It basically hides 90% of the blockchain stuff from the business.
So if a big retail company wants to launch a tokenized loyalty program, they don't have to go hire a whole team of blockchain engineers.
They don't. They just interact with a simple REST API, a format they already know, and Intermezzo handles all the on-chain complexity and security in the background.
Is anyone using it yet?
Yep. World Chess is already using it for the Tower loyalty program. They're recording player points and perks as verifiable on-chain data, but the user gets a totally familiar Web2 experience.
So Intermezzo makes it easy for the enterprise, Rocka makes it easy for the user. What about the developers building the next wave of apps?
The developer toolkit is seeing explosive growth. The release of Algorand TypeScript 1.0 this year was a huge event.
Right, opening it up to millions of TypeScript devs.
Millions. And looking ahead to AlgoKit 4.0 in 2026, we're seeing composable smart contract libraries, new SDKs for languages like Rust, Swift, Kotlin, and a really clear push toward AI.
Tell me about that. The AI-assisted tooling.
They're planning to train large language models, specifically on the Algorand dataset and documentation.
To create an Algorand copilot.
That's what they're calling it. Developers can just query the LLM for specific smart contract code, deployment instructions, troubleshooting. It drastically shortens the development cycle.
If AI can write half the boilerplate code, developers can focus on innovation.
That's the idea.
And that brings us perfectly to our third pillar, the bleeding edge. Preparing the network for economies run by machines. We're talking about real agentic commerce.
This is the most futuristic part of the roadmap, for sure.
So what specific infrastructure is being laid down for AI agents to trade and transact on their own?
So Algorand has formally adopted the Model Context Protocol, or MCP.
The MCP. I've heard this called the USB-C for AI.
It's a great analogy. It establishes an open, standardized framework for how AI models securely connect to external resources, data, tools, and crucially, the blockchain.
So if an AI agent wants to buy, sell, or deploy a smart contract, the MCP standardizes how it talks to the chain.
Precisely right. And that standardization is absolutely mandatory for reliability. To speed up adoption, a specialist implementation, the Go Plausible MCP server, is already live. It offers agents over 125 pre-built tools to interact directly with the blockchain.
Wow. So everything from querying an account balance to executing an asset swap.
It eliminates hundreds of hours of manual development for every team working on autonomous agents.
So the blockchain just becomes another reliable tool in the AI's toolkit. But for these agents to operate autonomously, they need, like, low-cost machine-native payment methods.
That's where the planned integration of the X402 protocol comes in.
X402.
It's an HTTP native payment standard. It leverages that long-reserved 402 payment-required status code. It means AI entities can request and execute micropayments directly within the standard web flow without needing heavy payment processors.
Okay, let's pivot from AI to an existential threat. Quantum computing. They're aiming for institutional adoption, so they have to address the long-term threat of quantum computers breaking current crypto.
They do. While the history of the Algorand ledger is considered quantum secure, the current account signatures and consensus mechanisms use the pre-quantum ED 25599 signature scheme. That needs to be hardened.
And the milestone in 2025 was a big one.
It was huge. The team executed the first successful post-quantum transaction on the Algorand mainnet.
That's a massive proof of concept. What quantum resistance scheme did they use?
They used the Falcon lattice-based signature scheme. It's one of the primary candidates selected by NIST, the U.S. National Institute of Standards and Technology for Standardization.
So they're building security that can survive for decades.
That's the goal. All right, let's ground all this incredibly technical talk in our fourth pillar: real-world utility and the market. We need to see adoption happening today, and the sources highlight a huge impact in aid transparency.
This is arguably one of the strongest proofs of utility for any blockchain right now. In September 2025, the Foundation convened the Humanitarian Aid Payments Council. Algorand is already powering aid distribution in really challenging regions.
Like where?
Afghanistan, through Hezapay, and Syria. We're talking about verifiable impact. Over 100,000 households served, more than $20 million in funds distributed on-chain.
That's real, measurable social impact. But aid gets criticized all the time for a lack of transparency, for funds being misused. How does the blockchain help solve that corruption problem?
They launched the Aid Trust Portal, the ATP. It's an online tool built on Algorand that allows literally anyone, donors, NGOs, regulators, to track and visualize the entire flow of dispersed funds on-chain in real time.
Complete transparency. A direct countermeasure to corruption.
It is. Okay. Shifting to institutional adoption, that partnership with NOAA in November looks like a really crucial step.
It's fundamental. NOAA provides institutional-grade regulated payment rails. It bridges TradFi with DeFi in major places like the US, Europe, and India. It's a compliant, safe on-ramp for institutions.
And what about tokenization? Real-world assets.
That's the other big push. They have a debt ASA, an Algorand standard asset MVP scheduled for Q4 using established ACT-US financial standards. It shows they're very serious about institutional-level asset tokenization.
So now we have to address the disconnect. We've talked about huge technical success, decentralization, real-world utility. And yet here in December 2025, the ALGO token is trading around 11 to 12 cents.
Right. Down significantly from its 52-week high of over 60 cents.
What stands out to you about that financial data?
What stands out is the profound market disconnect between the technical progress and the price action. The current range reflects, yes, a big bearish crypto market, but also a complex internal dynamic.
What's that dynamic?
The market cap is just under $1 billion, around 973 million, and analysts note the sell-off followed the shift away from the old, highly subsidized governance rewards. The market is it's struggling to properly value the long-term risk reduction that tools like Intermezzo and P2P networking deliver.
So if the tech is so strong, why are the long-term forecasts still so speculative?
Because the network's long-term economic sustainability is still an open question, and that is way more critical than short-term trading patterns. This is the entire focus of Project King Safety.
Oh, right.
Long-term forecasts suggest highs of $1.35 by 2026, maybe much higher by 2030, but that is all contingent on them solving the economic model first.
And Project King Safety is the initiative to redesign the fee structures, the validator rewards. And it includes a very controversial proposal.
It does. It's expected to be formally proposed soon. King Safety wants to ensure the protocol is self-sustaining long after the initial ALGO distribution ends. They have to guarantee perpetual security.
Which leads to the big debate for 2026.
It leads directly to the core debate: whether the community should vote to uncap the current 10 billion ALGO supply limit.
Uncapping the supply. That is a high-stakes, deeply controversial proposal. It fundamentally changes the tokenomics. Why are they even considering it?
Well, the argument is that to provide long-term self-sustaining security incentives for validators, a fixed supply could eventually become too deflationary. Security rewards might become insufficient, especially if transaction fees don't grow fast enough.
So uncapping it allows for controlled inflation.
Controlled minimal inflation targeted specifically at rewarding validators and maintaining the network's security budget forever.
But the challenge is convincing holders that diluting the supply, even a little, is worth the long-term gain in network security. That sounds like the ultimate test for the new XGov system.
Absolutely. That economic decision will be a major catalyst. It is the highest stakes community decision on the entire roadmap.
So to summarize the key takeaway for you, the learner. Algorand has moved past just being a fast blockchain. Their 2025 progress shows they are building institutional-grade, quantum-secure pipes.
Pipes designed for a regulated autonomous future, using tools like Intermezzo, Liquid Auth, and the new P2P network. The technical pieces are all in place.
Which leaves us with one final provocative thought for you to consider. If the world's most advanced protocols are now embedding tools for automated AI commerce, like MCP, alongside protections against catastrophic quantum threats, like Falcon signatures.
A powerful combination.
Will the convergence of these two factors force traditional financial systems, which are built on older, less secure frameworks, to adopt these new, fortified blockchain rails simply to remain functional and competitive in an increasingly automated and high-risk global environment?
That is the adoption pressure we'll be watching next year.